This is a seismic shift in how Americans think about retirement savings, and it's sparking major debate. Imagine being able to invest your 401k in the same digital assets that are shaking up the financial world. Well, that's exactly what's happening now. U.S. President Donald Trump has officially signed an executive order paving the way for American workers to include cryptocurrencies, private equity, and real estate in their employer-sponsored retirement accounts. But here's where it gets controversial. While this move is hailed as a breakthrough for crypto adoption, it also raises serious questions about risk, responsibility, and the future of retirement security. Let's start with the big numbers. Over 90 million Americans are currently enrolled in 401k plans, and the total value of these retirement assets has skyrocketed to $43.4 trillion as of March 31st, 2025. These figures highlight a growing trend. Most people are actively planning for retirement. Yet until now, they've been locked out of alternative investments that could diversify their portfolios. That's about to change. The new executive order opens the door for everyday investors to allocate a portion of their retirement savings to digital assets like Bitcoin. But is this a win for all, or a gamble with their hard-earned money? Petr Koziakov, CEO of Mercurio, a payment infrastructure platform, sees this as a turning point. He argues that Bitcoin's inclusion in 401ks signals mainstream acceptance of crypto as a legitimate investment. For years, alternatives like private equity and real estate have been staples for wealthy investors, he explains. Now, everyday savers can tap into digital gold, Bitcoin, with the right safeguards. Similarly, Paxos, a blockchain infrastructure provider, calls the move a huge milestone for crypto's legitimacy. Though they acknowledge administrative hurdles remain before the change takes full effect. But let's not ignore the elephant in the room: risk. Miles Fuller of TaxBit, a tax solutions company, warns that while the executive order doesn't create new legal barriers, it doesn't erase the existing risks either. Under the Employee Retirement Income Security Act, ERISA, plan administrators are legally obligated to act in the best interests of employees. If a crypto investment tanks and retirement funds are lost, those administrators could face liability. Crypto's volatility makes this a tough balancing act, Fuller adds. That's why most administrators have been cautious, until now. Still, some companies are already stepping up. For Us All and Fidelity are pioneering 401k plans that let employees invest directly in crypto. But here's the catch. The executive order doesn't actually allow direct crypto purchases. Instead, it points to indirect investments, like mutual funds or private equity vehicles that may hold crypto. So, while employees might see crypto exposure, they're not buying Bitcoin directly. This nuance is critical. As Fuller notes, these are real people's retirement savings. We need clear rules and education to protect them. So, how do you mitigate the risks? Kyle Chassé of MV Global suggests a long-term strategy. 401ks are designed for decades, and crypto's growth trajectory matches that timeline, he says. By spreading investments over time, a tactic called dollar cost averaging, and diversifying across assets, retirees can reduce the sting of volatility. Using regulated custodians and exchange-traded products, ETPs, for Bitcoin or Ethereum also adds a layer of security. But how soon will this take effect? Qgami of Swan Bitcoin's private team estimates it could take months or even a year. Regulators need to finalize guidelines, and plan providers must build compliant systems. Yet Fuller argues the groundwork is already there. The law allows it, and the executive order signals support. I expect some providers to act quickly, he says. The real game changer, he predicts, will be the new investment vehicles that emerge, like crypto-based ETFs specifically designed for 401ks. So what's your take? Is this a bold step toward financial freedom, or a reckless gamble with retirement savings? The debate is just beginning. Share your thoughts. Do you think crypto belongs in your 401k, or is this a risk too far?